Hello and welcome to Bitcoin Dorks, your daily source for cryptocurrency news and updates. Today we're going to be discussing whether you should buy the Bitcoin and crypto dip or wait. As you market has been experiencing some volatility lately with prices of Bitcoin and other cryptocurrencies dropping significantly. This has left many investors wondering whether they should buy the dip or wait for prices to stabilize. Before we dive into the pros and cons of buying the dip, let's first understand why prices have been dropping. There are several factors that have contributed to the recent drop in prices, including regulatory concerns, environmental impact concerns, and negative media coverage. Additionally, the market was due for a correction after reaching all-time highs earlier this year. Now, let's discuss the advantages of buying the dip. First and foremost, buying the dip can be an opportunity to buy cryptocurrency at a lower price than it was previously available. This can be beneficial for long-term investors who believe in the potential of cryptocurrency to grow over time. In fact, many successful investors have made a fortune by buying the dip during market downturns. Secondly, buying the dip can be a good way to diversify your investment portfolio. By investing in a variety of cryptocurrencies, you can spread your risk and potentially earn higher returns. Just be sure to do your research and invest in cryptocurrencies that have strong fundamentals and potential for growth. On the other hand, there are also some risks associated with buying the dip. One major risk is that prices could continue to drop even further, which could lead to significant losses for investors who bought in too early. Additionally, the cryptocurrency market is notoriously volatile, so there is always a risk that prices could fluctuate rapidly in either direction. Another factor to consider is your investment horizon. If you are a short-term investor or trader, buying the dip may not be the best strategy for you. In the short term, prices can be unpredictable and there is always a risk of losing money. However, if you are a long-term investor who believes in the potential of cryptocurrency to grow over time, buying the dip may be a smart move. So, what should you do? Should you buy the dip or wait? The answer ultimately depends on your individual investment goals and risk tolerance. If you believe in the long-term potential of cryptocurrency and are willing to accept some risk, buying the dip may be a smart move. However, if you are a short-term investor or have a low risk tolerance, it may be better to wait until prices stabilize before investing. Taking advantage of dips in the cryptocurrency market can be a prudent investment strategy for those who have confidence in the long-term growth potential of the asset class. Nonetheless, it is essential to conduct thorough research, invest in robust fundamentals, and stay vigilant of the risks associated with investing in the volatile market. Ultimately, the decision to buy the dip or hold off should be based on your personal investment objectives and appetite for risk. In addition, one factor to consider is the overall market sentiment. If the market sentiment is negative and there is widespread panic selling, it may be a good time to buy the dip. This is because prices may be artificially depressed due to fear and uncertainty and could rebound once the market stabilizes. Conversely, if the market sentiment is positive and prices are rising rapidly, it may be better to wait for a dip before investing. This is because prices may be overvalued and could potentially experience a correction in the near future. Another factor to consider is the regulatory environment. Cryptocurrency is still a relatively new and unregulated market, and regulatory changes can have a significant impact on prices. For example, if a major country announces a crackdown on cryptocurrency trading, prices could drop significantly. On the other hand, if a major country announces support for cryptocurrency, prices could skyrocket. Environmental concerns are also becoming an increasingly important factor in the cryptocurrency market. Bitcoin, in particular, has been criticized for its high energy consumption and environmental impact. As awareness of these issues grows, it's possible that investors may become more cautious about investing in Bitcoin and other cryptocurrencies that are perceived to have a negative impact on the environment. Finally, it's important to remember that the cryptocurrency market is highly volatile and unpredictable. Prices can fluctuate rapidly in either direction, and there is always a risk of losing money. It's important to do your research, invest wisely, and be prepared to weather market downturns. To summarize, purchasing Bitcoin and other cryptocurrencies during market dips can be a wise investment strategy for those who have faith in the long-term growth prospects of digital assets. Nonetheless, it is crucial to take into account various factors, such as market sentiment, regulatory changes, environmental considerations, personal financial circumstances, and investment objectives, before making a decision. By carefully assessing the risks and benefits, investors can make informed decisions and potentially achieve substantial gains in the dynamic cryptocurrency market. That's all for today's video. Thank you for tuning in to Bitcoin Dorks, your daily source for cryptocurrency news and updates. Be sure to subscribe to our channel and hit the notification bell to stay up to date